Hello and welcome. You're watching special post-budget coverage on ICICIdirect.com. I have with me a very special guest, Mr. G Chandrashekhar, Economist and Commodity Expert. Very good evening, Mr. Chandrashekhar. And you were very, very optimistic about the budget, and it has really lived up to the expectations as far as the markets are concerned. How do you rate the budget?
Yes, let me put it this way. For a developing country, a nation such as India, there are two sides to the coin. And the two sides, one side is economic growth. Second side is social development. And our social development indicators have been poor for very long years. This budget seeks to change that picture of poor social development indicators. We are very, very low in the Human Development Index. We are rather high in the Global Hunger Index. These are actually very shameful. But this budget, with its emphasis on healthcare and education, seeks to change that status. And therefore, this budget is a real good one from that social indicators point of view. This will not have an immediate impact, but it will have a 5 to 7 year timeline. This will tap into India's human capital and help the nation. Number one. Number two, the second side is economic growth.
Right.
One is social development, the other side is economic growth. From an economic growth perspective, I'm happy the budget, and as I rightly said in the pre-budget expectation, there is a major focus on infrastructure. If I recall correctly, it is about rupees 5.5 lakh crores. That's the kind of budgetary provision that has been made for a series of economic activities, including oil and gas sector, power sector, and textile parks, urban infrastructure, shipping, waterways, etc. And all these projects are commodity intensive. And they are going to give a big boost to commodity production and commodity consumption and commodity trade. And we need to consume a lot more commodities, and therefore we'll be consuming more steel, more copper, more aluminium, and other metals, more cement, for example. There is also the automobile scrappage policy, which means I think we'll be scrapping out old cars will be scrapped, and obviously that will boost new car availability, new car production, which again will mean higher demand for metals, for rubber, for tire, cotton, for seat cushions, etc., and lead for batteries. Therefore, I think all these are very, very positive for the commodity market. Look at textile parks. Yeah, look at textile parks. I think all the textile parks are going to kickstart a big growth in our cotton consumption as well as synthetic fiber consumption. And this is going to be this is extremely important for our country. And the benefit of that, I believe, should and will flow in some measure to the primary producer, the cotton grower, for example. If there is more cotton demand and cotton consumption, it'll definitely flow to the primary producer. But I think by and large, I think it's a good budget. There can always be some nitpicking, but I think we will not go into that.
This investment target of 1.75 lakh crore this time tamed down a bit. Achievable?
If you look at the track record of the last 2 years, it appears to be ambitious, but I'm sure the government has been doing work in the background over the last 1.5 years, so that there is hope that this target will be achieved in 2021, 2022. We have to remain hopeful, and that will of course augment the finances of the government of India, which is very, very much needed. But if I may add some more, there are tariff changes. A lot of tariff changes. For example, customs duty on certain steel products like longs. Customs duty has been reduced. Your anti-dumping duty, CVD, etc., on specified steel products has actually been waived. Given the current big rally in steel prices on the one hand, and a big demand boost coming on the other hand because of these infrastructure spend, I think the government has rightly decided that consumers of steel also need to get some relief, and therefore import duties have been reduced, etc. And therefore, I think this is good, of course, for both producers and consumers of steel. This is very positive.
ARC for bank to set aside sick assets, strategically weak assets. Good move.
Oh, yes, of course. All this is a good move. All this is overdue, really speaking. These moves are overdue. And many of the administrative concessions, etc., of not reopening your tax assessment beyond 3 years, etc. These are administrative moves primarily. They are not going to add to India's economic growth, but they will reduce the uncertainty relating to income tax assessment. But let me add again, go back to commodities, which is my favorite subject. For example, copper scrap duty has been reduced from 5% to 2.5%, which is very good, because I see our copper consumption is bound to go up substantially in the coming years. There is an import duty on cotton. A lot of cotton is imported, 2.5 million bales of cotton. Although we are the world's largest or second largest cotton producers, we also import long staple cotton, for example. Therefore, now there is a customs duty, which will be a disincentive for imports. And I would think the government must seize this opportunity to start encouraging cotton textile mills and cotton spinning mills, the large ones, to get into backward linkages. Start cultivating, producing these varieties domestically, and then you have the farmer producer companies available. And therefore, for cotton using user industry to establish backward linkage and produce their own raw material, I think it's actually a great move. But I think the government must proactively now engage with the textiles industry and the spinning industry. Yeah. And we can't ignore gold, obviously. Yeah, so go ahead.
How much has
gold? Yeah, I think we can't ignore gold. Yes, primarily there is no tariff change on oil and gas principally, or the effective rate remains unchanged. But there are provisions relating to ethanol production for the sugar industry, which means we will be moving towards renewable energy, which is again very, very positive. But I have some concern about ethanol. Okay, in the last 4 years or so, we have had surplus sugar production. God forbid, next year if we have a drought, and if sugar production were to drop, cane production were to drop, will we continue to have this ethanol policy? Can we afford to have? I don't know. But so long as we continue to produce enough of cane, say closer to 400 million tons of cane or 30 million tons of sugar, which we've been doing in the last 2 or 3 years, I think ethanol policy will work. But we also need to guard against vulnerabilities and weaknesses of Indian agriculture, given its monsoon dependence. And therefore, oil and gas sector, yes, it is neither positive nor negative for the oil and gas sector. I would have actually expected some announcement for electric vehicles, but I think nothing has actually come. But oil and gas sector, nothing substantial here.
Something for gold this time?
Oh yes, of course. That's everybody's favorite. Obviously, let me put it this way: that there is a certain sleet of hand, okay, which means that on the one hand, customs duties on a very large number of commodities, including gold. Customs duties have been reduced. A number of edible oils, a number of pulses, apple, a number of pulses, edible oil, all rationalized and standardized. For example, on all pulses, the customs duty is only 10%. On all edible oil, the customs duty is only 15%. But the government has introduced Agriculture Infrastructure Development Fund and imposed a cess. And therefore, the net effective duty remains the same. On gold, from 12.5%, the duty has been reduced to 7.5%.
Right.
But in the AIDF, Agriculture and Infrastructure Development Fund, there is a 2.5% levy that is cess on gold. Although I don't know, I don't know what's the connection between gold and the Agriculture Infrastructure Development Fund, but it doesn't matter. I think gold is like tobacco, is government's perennial favorite for taxing, and therefore gold's duty now effectively is 7.5 plus 2.5, 10%, and therefore I think effective rate finally becomes 10.75%, including that social welfare cess, etc., etc. Therefore, gold prices have fallen obviously because of this relief of close to 2.5 percentage points. Gold prices have dropped by about 1,000 rupees per 10 grams. And for our viewers and participants, I just want to mention the thumb rule is that given the current customs duty and the current rate of exchange, a $1 change in the international price will mean a 70 rupee change in the Indian price.
Right.
Internationally, it is per troy ounce, dollar per troy ounce, which is about 31 grams. So you need to convert it into 10 grams, and then so it's about if the international price goes up by $10, our prices will go up by 700 rupees. If it goes down by $1, our price here will decline by 70 rupees. So $1 equal to 70 rupees is the kind of equation, thumb rule that participants must remember. There is the talk, everybody says, yes, there is a reduction in customs duty, prices have dropped by 1,000 rupees for 10 grams, and therefore this is going to give a big boost to consumption demand in India. With due respect, I don't agree at all. There are two or three things which we must remember. One is that India is a highly price conscious market, highly price sensitive market, and I am convinced 40,000 rupees for 10 grams is currently the biting point. It's called the biting point. Once price crosses that threshold of 40,000 rupees, then incremental demand starts to drop. Only people who have to buy, you have a wedding in the family, you start buying. Otherwise, people don't buy. Investors will buy. That is investment demand. That is not physical consumption demand. The physical consumption demand has started to fall, which is what we have seen in the last 2 or 3 years. And in 2020, because of lockdown, etc., there is a very substantial decline in gold import and gold consumption. And therefore, this relief is okay, 2.5 percentage point in terms of customs duty, but it's not going to dramatically alter the demand or consumption side of gold.
Right. All in all, you seem to be happy. Thank you, Mr.
Thank you very much. God bless.
And sharing your views with us. Thank you so much.